In this episode, we sit down with Oleg Bibergan and Alex Shamis, managing partner at S16VC, to hear all about how they're backing European builders. The S16VC team started as an underground founder incubator in a Moscow apartment, which ended up spawning Miro and other great successes.
The nighttime part was hanging out with Alex and founders in the apartment. It sort of grew into this impromptu tech incubator. I, for example, realized that my angel portfolio has produced a 40 times TVPI return, and I've made more from my angel investing than from my entire 13-year career at Goldman Sachs. And at that point, I realized that now is the time for my daytime and nighttime to come together. This is when we started the fund.
For me, building a fund as a product company means running the fund as a product company, which means having OKRs, having big, hairy, ambitious goals, like having people do things that are outside of the daily routine, right? Things that move the fund forward. For me, it also means having repeatable playbooks, having a repeatable way to make great investments, not just relying on people, right? People don't scale. You lose your deal flow when you lose a partner, for example. You want to build something sustainable. It means having modes and network effects, doing things that scale.
We want to empower mission-driven founders to make the world more awesome through the power of technology and love.
The team is backed by 150 founders, counting companies like UiPath, Supercell, as well as Sequoia.
We actually already have a couple of big wins, a couple of unicorns in our Fund 1. Synthesia and Oyster, both European-bred unicorns. Synthesia both of them actually recently raised Series D. In Fund 2, we already actually see performance exceeding Fund 1, even though this is a more recent fund. So just based on kind of the rounds currently being completed across portfolio companies that have already completed, we see 1.8x return on investment on 2023 vintage. And that, to me, indicates that the system that we've spent investing and building in the last several years, is really taking shape.
If you're thinking about founder-led platforms, fund as a product, or high-conviction angel networks, this one's for you.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back, everyone, to the European VC podcast. Today, we're going to talk to Oleg and Alex, both from S16VC, and I'm super excited to ask them to share their deck in just a second, where we, in a short and crisp format, will ask them to go through everything, and I will then at the same time try and shed some extra light on the things they maybe don't tell us. So, guys, welcome to the pod.
Yeah, thanks, Andreas. And I really appreciate the opportunity to share our story. I guess I'll begin with a brief personal introduction, and then Oleg will expand on the story and himself. I've had a pretty colorful entrepreneurial career that allowed me to build business across 13 different markets, spanning US, Europe, Latam, Asia, India. I've had a lot of crazy stories, including one where I had to escape a country in the middle of the night. I had a time in my life when I supported myself for almost 3 years by playing poker in some shady nightclubs. But it all began in Russia, where I was born. My dad had a lot of tiny, small businesses, anything ranging from a grocery store to a currency exchange point to bottle collection. And I was always kind of circling around him, trying to build a mini copy of his business. So I can say that I almost had no choice but to become an entrepreneur. And when I got my hands on a computer, I started to take this entrepreneurial DNA into the age of internet. 1998, my family moved to the US, where I eventually went to a university in upstate New York, Rensselaer Polytechnic Institute, where I studied engineering, computer science, and where I started my first business. It was a food delivery marketplace. Eventually, it took a really unexpected turn. I launched the business shortly before graduation, and for obvious reasons, I couldn't raise any money. I had to put the company on hold, and I took a job at JP Morgan. But 8 months later, I met a Russian VC in California, who said that if I take the business to Russia, then he would invest. And I didn't think long. 3 days later, I quit my job at JP Morgan, and I was in Russia I crashed Oleg's apartment, forced him to become my roommate, made him invest in that company because that guy hasn't responded to my calls ever since. And that's how we became roommates. I ended up selling this company to Delivery Hero when they entered the Russian market. We merged. And over the next decade, I've built a total of 4 companies, each next one becoming progressively bigger. Unfortunately, hasn't built a unicorn yet, but had a bunch of exits in $50, $60 million range. And the latest company raised almost $80 million at a couple $100 million valuation. So we'll see where it goes. It's still active, running mostly in India. And about 3 years ago, I switched to running a fund with Oleg and a bunch of my friends. I made a difficult decision to step away from my company and run the fund full time. The reason I've done that is because I had this unique opportunity that I just couldn't pass by to build something with all of my best friends. And I'm really happy I made the decision. And I guess what I bring to the fund is this product perspective and really trying to build the fund as a product company, which means not just automation, which is also obviously a big part of it, but also everything from the way we manage the company to the way we build our modes, our culture, our network effects, and eventually a generational company, hopefully.
As everyone can hear, there's a very interesting story there. And you guys have a lot of stories to share. So if anyone is interested in hearing more, I definitely advise that you subscribe to the newsletter by S16VC, because you are good storytellers and you have a lot to say. And I've been enjoying following it a lot. And we will put some of the content that you've produced as part of the show notes for this episode. Oleg, let's go to you, my friend.
First of all, thanks for having us, Andreas. I'm originally from Ukraine, and like Alex, I'm a US immigrant kid. We met in Brooklyn, New York in 1999, graduated from a regular high school in the US, went into Harvard for my undergrad degree in economics, and then got a job with the Goldman Sachs unit called Special Situations Group that asked me to go to Moscow and help build out the business there. So I moved to Russia, and my job was basically to invest in the best companies from the region and then help them grow and take them public when possible on NASDAQ or other stock exchanges. And we have done this about half a dozen times, been first investors in companies like Tinkoff, which is the first and the largest digital bank out of the region, Kaspi, the same sort of digital bank out of Kazakhstan, several online classifieds, and many others, actually. And so my bread and butter was really, as I was sort of progressing through the ranks of the investment business, to find the best companies, invest in them, work with the founders to help these companies grow. And that was sort of the daytime part of my life. And in the meantime, the nighttime part was hanging out with Alex and founders in the apartment that we rented together at Shmitovsky 16 Street, which is where the name of the community and name of the fund comes from, S16. It sort of grew into this impromptu tech incubator in an apartment. It all started out with poker nights. Alex needed to make a living, so we invited friends so he could make some money to pay the rent. We then noticed that we sort of spend more time discussing startups and tech and product than playing poker during our poker nights. So we started something called business clubs, where we'd invite founders to be supported or roasted by other founders on their ideas. And that's how, for example, the story of how we met Andrei Husid, the founder of Miro, started, because we became sort of this infamous founder apartment in town. And Andrei, when he traveled to Moscow, he had enough money for an air ticket, but he didn't have money for a hotel. But we had a spare room, which we called the Incubator. And he used to crash in that spare room with us. And that's how he sort of became part of the crew. And eventually this snowballed into this tight-knit global community of founders. And sort of the nighttime part of what I was doing, apart from hosting, wining, dining, and hanging with the founders, was to angel invest. And it was a really, amazing perch to do it from, because these founders would come and hang out in our apartment. So it was a really easy sourcing channel. And that's how I ended up as an angel in more than 20 companies, including Miro, which grew to become a $17 billion decacorn, one of the largest European tech stories. Really, over time, this community spawned many sort of decentralized projects and initiatives, because when you bring founders together, and I guess you know this, they start things up. That's just a natural motion of things. And the advantage of our community is that everything that is started is organic and it's started by its members. For example, as our ranks grew, we kind of stopped fitting inside an apartment. And so one of us raised a hand, and he's now one of the partners in the fund, Mike, and said, why didn't we do a conference for founders? Because we can't fit everyone in the apartment anymore. So we started a conference called Founders for Founders, which is now 10 years old, and we run it every year in different spots in the world. Many founders have started knowing each other for many years and became close friends, and start asking the question, why do we only talk about business? Let's also, talk about other things and do other things together. One of the partners started a Burning Man camp, and we run it every year now for over half a decade. Most recently, the latest project we started, and we talked about it with you, was the hotel in Portugal, where we're looking to recreate the spirit of the apartment and make it sort of like a magnet for tech founders all over Europe to come and spend time together.
To share a funny story on that, David was actually, my co-founder was actually married in that property just after you guys took it over, I believe. But everything was planned before then.
There you go.
So it's already happening. All the VC guys are already going there to marriages and getting married there and everything.
And what we've noticed, what we're seeing is that indeed the community has rapidly gone global, and now we have actually chapters all over the world. We have a bulk of the community in Europe, but also the US, the Middle East, in Asia, and that gives us really unique reach. And the same thing happened with the fund. It kind of evolved organically from our angel investing. We like to say that founders can be in one of two states. One is without liquidity, when they're sort of grinding away at their startup. And the other one is when they start having a little bit of an exit, a little bit of liquidity, and they immediately start investing in other founders. Actually, before we started the fund, we have been angel investing for many years. And at some point, I, for example, realized that my angel portfolio has produced 40 times TVPI return, and I've made more from my angel investing than from my entire 13-year career at Goldman Sachs. And at that point, I realized that now is the time for my daytime and nighttime to come together. This is when we started the fund. When we started it, we realized that we really needed a platform to bring together what was already happening organically in our community, which is founders investing in other founders. It was also a great way to stay in touch and support each other as the community went global and all of these different chapters all over the world get formed.
Just for everyone hearing this, you have written a great piece on your journey and your reflections on the journey of raising the fund, both the first one and the second one, which was raised here during the VC winter, a lot of it. And we'll share that on EUVC at some point as well for everyone to enjoy reading. I really think it's a great piece. It's one that a lot of emerging managers will resonate with.
Yeah, it's been quite a slog. We can talk a little bit about that as well. But the vision that we're carrying forward is we want to build the fund as a platform for founders supporting other founders. So first of all, we're a community. We like to call ourselves a community of imperfect entrepreneurs. I think our troubles with today's podcast recording attest to that. And we want to empower mission-driven founders to make the world more awesome through the power of technology and love. And we see our fund as a platform and a process to build that flywheel of founders supporting other founders. We really look to build the fund as this sort of, if you think about the three nodes of the fund, you have the LPs, the GPs, and the portfolio. We're looking to build a fund that is all founders on every side of that equation. That's been sort of the intent with which we started. I want to cover a little bit now on the fund side where we are and sort of the journey we've had so far as a business. Alex and I were managing partners of the fund. Andrei Husid is one of the founding members of the fund. And together, as Alex said earlier, we bring components or expertise to build a successful global founders for founders fund. Investment strategy and execution. This is the background from Goldman Sachs and my angel investing that I bring on. Alex is a serial entrepreneur with 4 businesses under his belt, focused on building the fund as a product. And obviously, Andrei, as a founding member and founder of Miro, is someone who helps us enormously with getting involved with the best founder networks in the world, in addition to the community that we're building as well. We've brought together 150 founders as our LPs. We brought this amazing group from a variety of entrepreneurial journeys and outcomes, from sort of mid-sized to some really top names in the industry. And we've been really privileged by support of guys like founders of UiPath, Supercell, Bolt, Volt, Hugging Face, and many other top companies. And we also have been honored by institutional support received by, for example, Sequoia, who invested in both of our funds. And I'm still surprised they invested in our first one, because we were part-time operation. Our first fund was just 16 million, 1/6. Obviously, as S16, our first fund had to be 16 million. But they really saw the potential. And like I said, their support has been incredible. And they've also invested in the second fund as well. And so really combining the founder network as well as support by top institutions as our investment as our investment partners.
Just a question on the core team, because you have Andrei Husid, who's at the same time also founder and CEO of Miro. And anyone and everyone can see how important Andrei, of course, can be. But you can definitely also, and I've seen this in other structures, it can be quite difficult to fully realize the potential. And sometimes LPs can be a bit overpromised what an individual like Andrei can really bring to the fund, because actually it's more of a name than its actual involvement. What should make LPs more comfortable with the value that Andrei actually brings to the team, making him more than just a face and a name? That's what I'm asking.
We are always fully transparent about his participation, and I think everybody is quite aware that he spends 150% of his time on his company. But Andrei is such a power bank, that 15 minutes of his time per week, for example, can have a very disproportionate impact on the fund. So and I think if Andrei were more involved, it wouldn't be a $70 million fund. It probably would be a much, much, much bigger fund at this point.
I'd love to ask you if we could go into a bit about the productization of the community and of the fund, because that's something that's quite special about your setup. If you want to go something else, we perfectly can do that. But I think this part is super interesting, and it ties back to what you just described with the hotel and the community that you've built, the Burning Man camp, and everything, how everything connects together. I think that's a very interesting aspect of what you've built.
Maybe I can start, Oleg, and you'll chip in.
Yeah, I'll roll the slides in the meantime.
Yes, to anyone who's listening in and haven't yet shifted to a place where you can watch it at the same time, you can on EUVC, you can on YouTube. Definitely we've got the slides running here at the same time. So if you want to look a bit deeper, we've got it there.
Look, I think when most people think about the fund as a product company, they immediately think about all kinds of automations that you can implement, all the AI that you can use to parse the decks, to generate memos, to automate routine work. And this is certainly an important part of it. But in my opinion, it's maybe 10, 15%. It's almost table stakes today. It's not what it really means to build a fund as a product company. For me, building a fund as a product company means running the fund as a product company, which means having OKRs, having big, hairy, ambitious goals, like having people do things that are outside of the daily routine, right? Things that move the fund forward. For me, it also means having repeatable playbooks, having a repeatable way to make great investments, not just relying on people, right? People don't scale. You lose your deal flow when you lose a partner, for example. You want to build something sustainable. It means having modes and network effects, doing things that scale, right? So all of those things. And if you think about the three functions that a typical fund performs, it includes sourcing, assessing, picking, and managing your portfolio, helping your portfolio companies become successful. And the way we do it is, for example, we rely on our LPs and our community to bring deals to us. And for that, we build the product for them. We help them to be better angels. Like Oleg had said, our LPs are already in the state where they're mostly angel investing, or most of them are angel investing. And we try to help them to be better angel investors by building a fund in a way that they can fully engage with it. So for example, they have a complete window into our operations. They can see how each opportunity, each deal goes through our funnel. We share with them the reasons why we got excited in the first place and why we decided to invite a company for the first call. We share with them the reasons why we rejected the deal. They can raise their hand and participate in different ways in our process, and sometimes join as angel investors. So unlike, I guess, in most funds where you're mostly a black box, right? This becomes both fun and educational and fully transparent, which incentivizes them to send their deal flow to us. And then, the whole product that we build, it provides such a value add to the founders that they're incentivized to have us as co-investors in their deal flow so that their companies are immersed in that ecosystem. That's on the sourcing side. And there is a lot of technology that makes it possible at scale, right? Obviously, a lot of AI that parses decks, that generates news feeds, that allows them to interact with those news feeds, and so on and so forth. The second one is picking companies, picking deals, right? We're a generalist fund, so we rely on our community to help us assess opportunities, right? For that, we built a social graph inside where we marked everything that we know about our LPs, namely their areas of expertise, geography, stage, sector, so that we can tap into them to help us assess opportunities. And this is also exciting for them because it helps them to stay on top of what's happening in the world, right? And also creates opportunities for them to angel invest, to advise companies, and so on and so forth. And lastly, I guess the most important one and the most difficult function to scale is helping portfolio companies. And we have a motto inside that says that we treat every founder request as our own, which is, which changes your mindset immensely from just helping opportunistically when the solution to the founders asks is on top of your mind. When you treat every founder request as your own, that means you just don't give up until you find a solution. We have brainstorming sessions. We log every request. We track the time of first response. We track the resolution time. We have a brainstorming session. And again, we rely on our community to help us do that, achieve that at scale, right? So we find the best person to solve a specific issue. We have a chat where people can ask questions and our most hands-on LPs can reply. And we have a human in the loop process that finds the right person to respond if there is no organic response. And again, all of that requires some technology, but the technology is simple. It's straightforward. It takes some programming, but it's almost table stakes. The most difficult part of that, the most difficult part to replicate is what we call the social engineering part of it, right? How do you actually build the culture of responding, reacting to requests? How do you build the affinity and the feeling of safety to ask for help? It's surprisingly challenging to get people to ask for help, actually, right? in the group setting, especially. This is where our unique history of building the community and the DNA of all the partners comes into play, being the community builders, right? And creating all kinds of opportunities for people to connect and to build affinity in the group. That's just the gist of it. I'd love to, spend 10 minutes on every screenshot here to explain everything that you build, but I'll stop here.
Incredibly interesting. And I think this, to me, is an example of where the productization of the VC firm has been taken a bit further than what I usually see. And I think I often see the headline, and this is what I often talk about when I think about how managers can maybe improve in the ambitions that they're building and the ways they present to LPs, is I oftentimes wish this red thread between them saying we're productizing venture capital as an example, or we have a community that we leverage, and then you never get this complete breakdown of the activities that are happening inside the fund and the principles that guide you and so on, to understand what it actually means. And I really appreciate the way that you guys describe it and how thoughtful you are about it. I often talk about it as the flywheel of activities inside a firm. We're so asset constrained in venture. We have so little money to do with management fees, are not big on small funds. So making sure that every single thing interlocks and allows you to build momentum is so important. And I think that you're a great example of that. Oleg, take us to the next thing you want to say.
Just to react to that, Andreas, this is why, for me, as someone who coming in from, the world of Goldman Sachs and sort of the investments, it's such a thrill to partner up and build the fund together with Alex and other tech founders, because sort of that product mindset that is being brought to the table combines really well with solving the biggest problem that all VC funds have, and frankly, all the entire ecosystem has, which is how can you do things at scale? How can you source deals at scale that are high quality and that have, how do you discern signals from noise at scale? For us, for example, in terms of where we actually find deals, 100% of our deals come from inbound. And sort of the highest kind of metric that we look for, the strongest signal that we look for when initially assessing a deal is what we call credible referral, which is when a founder, either as our LP or someone from a broader S16 community, recommends another founder, and particularly if they also want to angel invest in that founder, right? If somebody knows, someone for many years, have seen them in different environments and, seen how they operate and want to invest, it's a much more credible signal of trust and underwriting compared to sort of like a speed dating that a lot of early stage investing is. And so we, by building a system that can aggregate and process these signals and leads at scale, we think we can scale the business to thousands of founders and LPs and thousands of deals over the next 10 years. And then looking, on the back end, how we're doing on the portfolio side, we actually see that the system is working really well. Just looking at the portfolio, we've made over 70 investments across two of our funds, Fund 1 and Fund 2. Fund 2, we have mentioned that we started investing it in 2023 and have done final close in Fund 2 just this month, actually, oversubscribing it at $70 million. So now have over $100 million assets under management and around over $40 million of dry powder. And we already have, given the first fund was from 2021, we actually already have a couple of big wins, a couple of unicorns in our Fund 1. Synthesia and Oyster, both European bred unicorns. Synthesia both of them actually recently raised Series D. And in Fund 2, we already actually see performance exceeding Fund 1, even though this is a more recent fund. So just based on the rounds currently being completed across portfolio companies or that have already completed, we see 1.8x return on investment on 2023 vintage. And that, to me, indicates that the system that we've spent investing and building in the last several years, is really taking shape. And we actually see that the returns are improving, even though the amount of time for the companies to gestate goes down. So very exciting to see that. And in terms of, where we think sort of the biggest important factor for us in terms of deciding where we invest next is what we like to call it, we look for the next mirror-sized win. So we look for the investment opportunities where we can see at least $100 million in ARR over, we need to be able to see the scenario for $100 million ARR outcome. We take that market analysis and merge it with the founder assessment from the credible referrals from our, IC that has 7 active founders, on the IT roster. And we assess that with the early signals of product market fit. And as well as co-investing with some of the best names in the business, like Sequoia, Kleiner Perkins, General Catalyst, North Zone, and many others. And in terms of, maybe just to finish this up, in terms of the fund, we actually believe in a diversified approach. So we look to invest in around 50 companies out of each fund. We prefer an active follower role where we invest, let's say, around a $1 million check, take 4 to 5% average stake, with the main idea that we essentially want to be positioned and act as sort of a founder glue for the ecosystem, where we don't have to compete with strong lead investors, but we can complement them through the community and the platform that we're building.
I want to add some color to what Oleg said about credible referrals, if you don't mind, because I think this is actually critical, a cornerstone of our strategy. We have a motto that we treat every founder request as our own, but we also have the second motto that says that best deals go to best friends. What we learned, and it's not an insight, it's a common knowledge, that everybody loves investing in people you already know, right? Your ex-employees, your ex-colleagues, people you've invested in before and you've seen them execute. The issue is that normally it's not scalable. It's not a scalable channel. And I think it's one of the reasons why emerging managers tend to do well, because we have this amazing network. But when you start investing, building a fund, you exhaust that network. And we feel like by building this decentralized community, we have a unique opportunity to make it a scalable sourcing system, right? Where we don't have to rely on us specifically on every partner, even though we have 8 partners, it's still not scalable, right? But when you have this large cloud of people doing all kinds of things that promote the whole community and everything kind of looks back to us, that becomes really scalable. The beauty, I guess, of what we are building is that we are a community-based fund. Community is at the core of our business, our strategy, but we are not building the community for the fund. And that's, I think, the big difference compared to everybody else who, has a strategic offsites and decides, oh, we got to go into the community, right? We were building the community before the fund, and we would be building the community regardless of the fund. This is just part of how we want to live our lives.
I also want to just say, you didn't say it, Oleg, but of course the performance numbers you described, we're recording this the day after the Big Carta study report came out. Based on 2,079 US venture funds, it says that in 2023 vintages, the 90th percentile is at 1.19, so 1.19, and you guys are at 1.8, well above that. And with your fund 1, you are just in the 90th percentile as well. So guys, you have built something beautiful already, and I can only say that I am super excited about following the rest of your journey and also doing stuff with you in your hotel in Portugal, of course. That's going to be fun. Gentlemen, thank you so much.
Thanks, Andreas. It was a pleasure.
Thank you, Andreas.
By the way, to anyone listening in, if you want to see the deck here in connection to the conversation we've had today, we will have it on the platform, so you can go in and hit a button there, and then you'll be able to access it. Just go on EU.VC, find the episode, and then you can pick it up there.